Hello, and welcome back to the Talent Pieces podcast. I'm your host, Carlos Delcid. And here, we talk all about talent and culture for entrepreneurs, startup founders, and business leaders looking to scale their companies effectively. If you find today's session helpful, don't forget to share it with fellow entrepreneurs and follow the Talent Pieces podcast on YouTube, Apple Podcasts, and Spotify. Hello, everyone, and thank you for joining one more time the Talent Pieces podcast. I'm your host, Carlos Delcid, and today we have my good friend and a very good player in the Atlanta tech ecosystem, Charles Robinson. So, brother, great to have you here. Very excited, about our conversation, and the audience can get to enjoy some of Charles' knowledge.
I appreciate you, bro. Thank you.
My pleasure. All right. So I wanted to have this conversation. So especially because whenever you're an entrepreneur, you're in the startup world, you get to have a lot of conversations about, are you raising capital? Do you have all the money that you need? Do you have the right investors? Do you got the right advisors? So I think there's definitely something into you know building a startup that comes with having the right advisors, but also having the right investors. So tell me a little bit more about what's that landscape, and of course, how did you got to a point where you open your own VC firm? So before we get into that conversation, um maybe a little background on who Charles is and how did you got to a point where you are today.
Well, who is Charles? Let's see. I'm a father, I'm a husband. I'm an entrepreneur, and I'm an investor. I think all of those things, if you double clicked on them, there's like hundreds and hundreds of pages.
PDFs.
Yeah, PDFs. Well, I mean, shoot, AI probably generated that now these days. But you know, uh, I guess if we're given the Cliff Notes version, that's who I am in a nutshell. And I like, what's the word? I like seeing people win. And in any ways I can possibly contribute to that, I'll try to do it. Whether it's coming on things like this, having conversations with founders, um, providing capital,
Right.
things like that. So that's me in a nutshell. How I got to where I, am today, it was not a straight path. Um, it was definitely one of those things where a lot of my relationships played a huge role. And still to this day, my relationships play a huge role in my success. Um, and yeah, so I'm excited to, see where that takes me in the future and continue to take me in the future. But yeah, that's how I got to where I got to today. Now I could go through like step by step by step by step, but I think that's probably the 30,000 foot overview of who I am and how I got to where I got to.
So what do you guys do at 1888 Ventures? What are you specialized on? I know it's you, Ray, probably someone else in the team, but just tell us a little bit of how today, landscape looks for Charles.
Yeah, so 1888, we're an early stage VC firm. We syndicate deals from pre-seed to Series A. I will say, typically the deals that we end up writing checks to are seed. That's probably like our sweet spot.
Right.
Um, we say that we are agnostic when it comes to industry. We look at all types of companies. We've invested in healthcare. We're looking at sports apparel. We've looked at all types of deals throughout the Southeast. So geographically speaking, if it is in the Southeast, we'll look at them and see what we can do. We do not lead rounds, so we follow on most of our deals, all of our deals. So yeah, if there are really dope deals that has a lead, hit us up.
Awesome. I love how how by just explaining what you do, you can tell there's a lot of factors into getting capital, like leading rounds, like supporting rounds, like seed funding, pre-seed, then there's a series A. So if you're an entrepreneur, you're starting your business, or you have already a very successful business, and you want to consider raising capital, what are those factors that you need to consider even before starting those conversations?
So before you want to raise capital, first you have to decide whether raising capital is necessary. I mean,
Right.
a lot of times when I talk with founders, they really don't need to raise outside capital. Maybe they need to be more patient and focus on scaling the business. The growth of the business will not grow at a faster rate than if you did raise capital. So sometimes there might be some level of impatience there. But I would say, really, double down on whether or not you need to raise capital after that. And you do decide, go down that fork in the road and say, you know what, I think I can raise capital. You need to decide whether it's going to come from angels, whether it's going to come from VCs, and what stage
Right.
though those VCs are looking at. And I always talk about the three T's, timing, talent, and TAM. And timing means, for me at least, what you're doing right now, can it be done 5 years from now, or you're too late? Like, why now? Why is the
Right.
solution you're providing right now is valuable right now? If you can prove that, then the next thing is talent. Do you have the team to execute on the vision to make your dream a reality? And then the TAM, which stands is an acronym for Total Addressable Market, is the market big enough so that if you do capture a small percentage of it, the investor can still make a return on their
Right.
investment. And if you have those, three T's, backed up, doesn't mean that you're going to be successful, but at least it kind of validates your justification for wanting to raise capital. And if you don't have those things, I say you go back to the drawing board.
Right. And even before going to the three T's, you were mentioning about not every company needs to raise capital. And sometimes, and talking from a personal experience, um, sometimes you get into, what the ecosystem is doing, what your, fellow entrepreneurs are doing. And sometimes you ask yourself, like, am I doing the right thing because I am not raising capital, or because it's not in my roadmap? Um, so how can you tell, or what will you tell to those individuals or entrepreneurs that haven't figured out if they need to raise capital or not? Because again, sometimes it even feels like peer pressure. Like,
Hmm.
my friend raised 1 million. Should I be raising 1 million too? Do I need to raise 1 million? So what can you talk about that? And have you seen that happening?
Oh, for sure. I mean, there's definitely capital raising culture that we're in right now. And I skew towards the baseline of not raising capital. It's funny because as a venture capitalist, you want folks to, want to,
You want to write checks all over the place?
yeah, I just want to just just throw money all over the place for people. No, man, I think an analogy I always use is, if you're driving a car at 45 miles an hour, um, the equivalent of you raising capital raises that miles per hour to like 70. The next round, 100 miles per hour. The next round, 200 miles per hour. And when you think about driving a car at, 45 miles per hour, if you were to get in a car wreck, you know, that car, proverbial car, meaning your business, will survive.
Right.
But if you're driving a car at 200 miles per hour, it's very low likelihood that anything
Right.
survives at a crash or an accident at that speed. So the reason why I suggest, not to raise capital is because a lot of times you can really grow the business and be successful. And even if you have mistakes, you can avoid those mistakes because you're moving at a speed that allows you to solve problems.
Gives you more control, more.
Yeah, more flexibility, more control over what the outcomes may happen as these different obstacles come your way as you're on this road to success. I think because of social media and because of, this idea of, I don't want to say just get rich quick because I don't think everybody has that mindset. I think there is the gap between what it really takes for you to grow and scale your business, and raising capital almost kind of cloaks you from being able to have to do the things you necessarily have to do. So to your point where we talk about this culture of like, should I raise and things like that? Yeah, because you know if you raise money, you may not have to worry about identifying the best customer for your business and being
At least
very,
not today.
at least not today. Yeah,
Yeah.
it just pushes it down for another time, and then you just keep getting on that infinite loop, and then eventually you figure it out, but it doesn't always work out that way. And I would say you're probably better off thinking with the mindset, I don't want to raise capital. And then if you get to some critical mass of growth where it's predictable success, and you do decide to raise capital, it will be a lot easier to do it than if you try to raise capital without having those problems solved.
Yeah. Especially, it's not like a day one conversation. It's not like,
No.
oh, I opened this company called Puzzle today, and
Yeah.
tomorrow I'm raising a Series A for 1 million. Like
Yeah,
that.
because you also have to have uh, an exit, because that's how people make money. Like
Right.
otherwise, you just have a pretty piece of paper that says you own something, and what is that exit going to look like, and who's going to buy you, or are you going to IPO? Like those things are very difficult to do. It's
Yeah.
hard to just grow a business, period. But
Yeah.
to get to an exit where you can convince someone that your business is strong enough where they want to buy you, or whether or not you want to go to the public market, is very, very difficult.
Yeah. One of the things that, maybe it's very intentional in this podcast is, let me tell you the real deal about entrepreneurship. Because sometimes we see this TikToks or this reels on Instagram where a guy says, "Oh yeah, my I'm 2 months into my business and I'm already making 2 millions, and I already raised like 500 million because I have the last AI
Right.
solution." Yes, I'm not saying, well, that's probably not true, but
Mm.
in some cases it is. But it's not the reality for every business, and it should not be the reality for every business. Like as you were saying, like some companies actually will get there even in better terms, in better conditions, if they just hold it for a second. And the part about driving slow or at 45 miles an hour, at 70 miles an hour, is you can actually see the whole panoramic view. You have time to see all the angles, all the perspectives, all the potential exits. But if you're driving 200 miles an hour, it's like, focus on the freaking road.
Yeah, but driving 45 miles per hour is not sexy. I mean, and
Yeah.
that's the part of the culture piece that you're talking about. It's like if you're not raising, then like what is your business doing? You know what I mean? And this may be a very controversial opinion, but a lot of times I would suggest you should be doing a job, like an actual job, while doing your business until you can get it to a point
Right.
where you can like truly scale. But that's not sexy
That's
either.
not
But
sexy.
nobody wants to talk about that.
But that's the real hustle.
That's the real hustle.
That's the real
There
hustle.
are a lot of people that I know who are more successful in their businesses who are still working a full-time job and still growing their business, and their business is more successful than the folks who are trying to hustle and bustle and raise some capital to fill their grocery money
Right.
situation. I think, that should be talked about more often than not, but it's not.
Yeah, I absolutely agree. Hey there, quick break. If you are enjoying today's conversation, don't forget to hit subscribe and give us those 5 stars. It will help us grow a lot. Now, back to our conversation. Now, going back to the 3 T's.
Yeah.
Um, and every time that you and I have spoken about the 3 T's term, I go back to, in my head, how entrepreneurs focus a lot on their PowerPoint, on their slides to present this. But it's not really about the slides. It's not really about even everything you're saying. It's about, your knowledge and your capabilities to execute around, you know, whatever business you're doing. So how to say we meet or we find your business separately from what we just spoke. This is a business that it's in the right time, it has the right time opportunity, it has the right talent, and it actually has a business model that could benefit from raising some capital. So what are those things that a founder should consider? How will they get ready for that presentation? Because they hyper focus on their slides most of the time.
Yeah.
What's the real deal in that room?
So the real deal, the reason why we do any of this stuff, right? You want to be able to accelerate trust. And when you create a deck, when you provide your financials, when you provide references for your business, such as your customer references, etc., all you're trying to do for the other person on the other side of that conversation is accelerate trust. You want to be able to get to the point where they believe what you're telling them.
Right.
So when it comes to your deck and data room, etc., you want to try and figure out, again, one, you got to do your research on the firm you're trying to engage with. Um, I cannot emphasize that enough. Sometimes people just hit people up like, "Hey, I'm interested. I'm trying to raise some capital," and you don't even know what their last deals that they invested in. You might not even be in the same, you know, stratosphere in regards
Right.
to what they're looking at right now. They may have done that, a few years back, but they're not into that right now. That's one thing. So, based off of the firm that you're talking to, you want to accelerate trust. So when it comes to your deck and your strong suit, your superpowers is probably a better analogy. You want to try and hone that as quickly as possible within your deck so you can move them to the next stage of the conversation towards you getting
Right.
capital. Yeah.
But one of the things that we have also discussed is how do you build those relations even before you need them? Because
Mhm.
in reality, those relations will take you farther along in your opportunity than, again, a couple of slides.
Yeah, man, and that's another thing. I think, and I don't want to make any general statements, with this, but I will say there are some entrepreneurs that are lazy that wait to the last minute to try accelerate the trust,
Right.
and they haven't built anything prior to that engagement. Because a lot of times, and it's unfortunate, is that relationships are the key. Your network is your net worth, right?
Right.
And sometimes there's implicit bias where, groups of friends usually work with groups of friends, and you just got to figure out how do you get in that room. And sometimes those rooms are not naturally rooms that you will get in, but how do you do it is the question.
Do your homework.
Do your homework. And, once you do your homework, what type of things that you have to, what problems do you have to solve in order to remain in that room? What problems do you have to solve to accelerate trust in that room? And quite frankly, sometimes you have to play the probability game. Maybe it's 2 out of the 10 rooms you try to go for, only two of them let you in.
And the interesting part about getting into the room, it's also you as an entrepreneur determining now that you're in, is this what I really wanted? Like, because it's a two-way relation.
Yeah.
Yes, you are going after the check, but it's not just about the money, it's where the money comes from. So I need to understand that, or entrepreneurs need to understand that it also matters who is writing that check,
Yeah.
because they will potentially have a seat in your board. They will potentially have decisions over your business. So you also want to know, like, can I work with them in the long run? Can I build this relation in the long run, especially because now we have interests in common?
Yeah, man. I think the biggest thing that most entrepreneurs have to understand too, and this is very rare, that you would raise one round and won't be able to need another round.
Right.
The question you have to ask yourself is, the money that I'm receiving from this investor, will that investor assist and help me or contribute to my success in being able to raise subsequent rounds?
Right.
What value add are these investors now that they can give me so that I can raise later? And sometimes, even it happens a lot with angels. They just want to throw some money in there and say, "Hey, good luck." But then you get ready to raise the next round, you're having just as much or more difficulty being able to do that, and that's where you fall into that trap, because a lot of founders can raise pre-seed. A lot of
Right.
founders may get stuck at seed round. The Series A and above, that's where you're going to see, a lot of the posts coming out saying like we can't find capital and things like that. But the reality is, it's like, where are those investors that you sought after? And there may not be a lot, but the reality is, goes back to what we were saying before. Is your business at a point where you should be raising capital?
Right.
And
Right.
then when you do decide that you are able to raise capital, you know, not all capital is created equal. You
Yeah.
know,
And can they open that conversation for you, right? Like, are they plugged into the specific sector or the specific ecosystem audience that you're trying to sell to. Because
Mm.
even like if you invest, if I am an investor, I'll definitely invest in service companies because that's where Puzzle is today. I can get to invest in some tech companies because of what we do at Puzzle. But will I don't know, do something in the medical field? Probably not.
And this is the thing that people are not going to say either. Sometimes entrepreneurs don't care. They're just trying to get a bag to close that gap on the grocery money,
Let's
and
get that check.
yeah, like we don't got the revenue that we need to pay my bills, but if I raise this capital, it'll give me enough runway to continue to try it. And that's a dangerous spot to be in because even though you may solve the problem for now, but it doesn't alleviate the problem. It just pushes it down the road for
Yeah,
whatever time frame it gives you. And you're still going to have to solve it, but that's going to be that much harder because now instead of being at 45 miles an hour, you're going 75 miles an hour, still having to solve that problem
yeah,
that you didn't solve at 45. So that's what I think, a lot of times too, when it comes to making the decision on, you know, will this investor, is this investor more than just a check? Quite frankly, some entrepreneurs like, listen, I don't care. I just need that check. Like,
yeah. And maybe this is an unpopular opinion, but your grocery problems are not the business problems.
no, man.
And by that I mean, don't try to solve a personal problem with the company's money, because if your personal needs are driving the business, it's not going to take you anywhere
Ever. Yeah.
ever.
I mean, you're
So
spot on. I think that also it speaks to this gap between grocery money and making decisions that's best for the business.
right,
And unless you have that security of making sure like the bills are paid and all of that stuff, you will almost never be able to make the best business decision because maybe there's a client that uh, does not fit the business model that you're trying to provide to the market. You're going to have to say no to that client so that you can find the client that fits the solution that you're providing to the market. If you're struggling to keep the lights on, and this is probably more the analogy I was trying to get to, is you're not making business decisions, you're just trying to keep the lights on.
yeah,
And if you're doing that, it's a recipe for disaster.
absolutely.
Yeah.
Now, what do you think is the landscape for investment for 2025, especially in the Southeast? I I will say it has never been a hot market for venture capital or for just investments overall, right? Uh, it's changing, it's growing, but how do you see things evolving?
Oh man. Uh that's an interesting question. There's so many things I could say about this. Hmm.
Haha,
Well, I
got you
mean,
there.
well, we are in a pivotal time in American history where, you know, there are a lot of headwinds and tailwinds that are coming in and coming out politically. There are things that are coming out and coming in economically. You know, when it comes to the investment community in 2025, I say that there's going to be a lot of money that'll be in the markets. You just have to ask yourself as a founder. I'm gonna speak to the founder and then I'll speak to the investor because both are always raising.
Yeah,
Investors are raising capital, founders are raising capital. I think this will suffice for both, but please feel free to ask more detailed questions. But you have to ask yourself, who has my money?
right,
And depending on where you sit as a founder or where you sit as an investor, will determine the type of conversations you need to start having, the rooms you need to try to start being in, the uh, philosophy you need to
right.
try to adopt, and play the game. And that's probably the best way I could say it. Yeah.
No, I look, I agree, and and part of that is building community, creating relations. even if you're not going to need them for raising capital, but it's plugging into the ecosystem. Like, I got to meet Charles a couple of years ago, but one day
Mhm.
you posted, "Oh, who wants to hit the gym?" And I'm like, "I want to hit the gym," and of course, by all means, I wanted to hit the gym, but at the
Mhm.
same time, it's how can we build that connection,
Yeah.
right? And here we are now. We're friends now.
Yeah.
Now we don't have any like specific business in common, but it gets to be part of the ecosystem to build connections. So I think you just have to find creative ways other than, hey, can I show you my pitch deck
Yeah, let's get
and
some coffee, like, because I
write
feel
me a
like
check?
that was pretty creative, man. Because we spent more time together in the gym than I would have spent just grabbing coffee, because
Telling you guys, gotta figure
yeah,
it out.
yeah, hit the gym. Yeah, I had him doing some crazy stuff, man. We gotta get you back in the gym, man.
Yeah,
He's
yeah.
like,
Look, 2025, we're gonna go back to being healthy. It's
it's
part of
captured on camera, y'all. We'll do another podcast episode to see when he actually showed up to the gym with me. But
we're, we're gonna start that episode with the weight with the scale, okay? Trying to see.
don't do that. I'll hold you accountable to it.
So my last question to you will be like, how has building the right team play a role in your success? And what have you learned about finding and nurturing great talent along the way? This might be right now for 1888 Ventures, but it will be, or it might be also part of your initial entrepreneurship. Like, how the right talent define today's success for Charles Robinson.
Man, I'm involved in a lot of business ventures outside of just 1888. 1888 is probably uh the venture that's most known in Atlanta.
Right.
But I have a social impact fund, in Durham. Um, I would say it is the lifeblood for someone like me to be able to tap into the different things that I'm doing now. It is the team. It is absolutely the lifeblood in order to be successful. Everybody has a superpower. And I think really good leaders can not only cultivate and help the person that they're working with find that superpower, they also can enhance it to get them to get out of their own way, uh, to focus on their positives
Right.
and not necessarily, focusing on the negatives. And I think we're adopting that as a culture, especially in the entrepreneurial culture, of focusing on our strengths. Whereas, before, probably, 7, 10 years ago, we were like, oh, you got to focus on your weaknesses and all
Yeah.
that stuff. And I think we're doing a better job of that. But that being said, as a leader, you really want to find the team that complements uh, the superpowers that you have, but then also figure out how they close the gaps on the weaknesses you have as
On
well.
the superpowers you don't have and that they
Exactly.
can bring to the table.
Exactly. And, I think that is, if you can figure that out and focus on the execution, there's really nothing you can not accomplish, with your team. And I always say, and then I'll end with this is, if I'm the dumbest person in the room and I'm the weakest link, we're probably going to win that game.
I 100% agree with that statement. I feel even that's how I've built and crafted my puzzle team is okay. Who's better than me in sales? Who's better than me on recruiting? And again, I'm a recruiter in my background, so hey, they're better be very very good, right? And
Yeah,
and you create a team of 8 players that can execute, but also become leaders that will develop the next generation that it's under them.
absolutely. Absolutely, man.
Well, Charles, I appreciate you making the time for this conversation. Really, really enjoyed it, and thank you.
You already know, brother.
Thank you, everyone. Stay tuned. And that's it for today's session. Thank you for tuning in. Don't forget to hit subscribe and follow the Talent Pieces podcast on YouTube, Apple Podcasts, and Spotify. You will help us grow by sharing this podcast with fellow founders and entrepreneurs. If you have any questions or topics that you would like us to cover, feel free to leave them in the comments.